You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time, once again, for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, the ever-interesting, the ever-compelling Options Insider Radio Network. Quite a few programs, including legions, that's a technical term, legions, of archived episodes of this fine program, Volatility Views. The easiest place to find all of that good stuff, the mothership, the flagship, theoptionsinsider.com. While you're there, of course, breaking news from the options market, a lot of great education stuff, a lot of unusual activity. I know a lot of you guys like that as well as, of course, a lot of other great articles and in-depth analyses. You can find it all over there on the site, theoptionsinsider.com. We tweet out a lot of links to that stuff throughout the day, too. So if you're not following us over there at Options on Twitter, do so post-haste. You're missing out on a lot of great content, our midday, end-of-day most actives, all that stuff you guys love, and quite a bit more. Of course, if you just want to mainline the radio, we got that for you too. iTunes, TuneIn, Stitcher, and so on and so forth. Also, via our mobile app. And of course, if you really like your vol views, you want to get it live into your ear holes, you can do that live every Friday, 12 p.m. Central. 1:30 is our other program, TRIFO. 12 p.m. Central via Mixlr, Mixlr. And of course, if you have that link of the past, it's the same one. Just grab it if you want to follow us over there. Mixlr, you can do so as well. And then you'll be notified the instant, the very second that we go live with every program, not just this fine program, but all of them out there. So if you want to have some of our live interviews from throughout the week or option block throughout the week, all of them, if you follow that one account, you'll get notified when they all go live, and you can pick and choose at your leisure. At the end of the day, no matter how you listen live after the fact via the app, however you get it, we do love to hear from you guys. So hit us up, questions, comments, insights, pearls of wisdom, maybe some good jokes too. We love them all. Hit us up. You know how to find us. All right. And joining me on the old program today, I'm not sure where anybody is. Let's just pick a name out of the hat. Let's start with the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the Volatility Views program on this relatively volatility-free Friday. What's going on in your world? Welcome back to the show. And where the heck are you today?
I'm in one of the 10 towns that changed America, Riverside, Illinois. And, it's a great day. It's nice out. Just ran to Costco and refilled a prescription because things are slow enough for me to do that type of stuff. And all in all, pretty nice day.
That's how you know we're flirting with single digits VIX when Mark Sebastian is taking time off to go to Costco during the trading session. That's when we know things are a wee bit quiet. One of these days we'll have to dive into the other 9 towns on your much heralded 10 towns that changed the world list. I'm curious if Riverside's on there. What the heck else is on that list? We'll get to that one day, but first let me welcome in our other cohort, our volatility partner in crime, beaming in. Who knows? Could be from the corner office at the CBOE down the street. It could be from the heart of the forest in Kamloops. You never know with this guy. He is Russell Rhodes, the former senior instructor at the Options Institute. I'm not sure what his title is now. I just call him Major Domo over there at the CBOE Options Institute. Mr. Russell Rhodes, welcome back to the program. And where the heck are you this week, sir?
I'm in the corner office. I have been catching up on expense reports, getting ahead on expense reports when I'm heading to Hawaii and Copenhagen and London on behalf of the exchange over the next few weeks. And don't have any prescriptions to refill. I'm pretty stable. So that's about it. But same thing as Mark. We're near single-digit VIX, so catching up on everything else in the world.
You're filling out expense reports. Mark's running off to get prescriptions. Perhaps that's an indicator of what's afoot in the marketplace. Don't worry, though, listeners. We got you covered. There's some good stuff to talk to and about. So let's get to it with the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Vol Review, the portion of the show where, as the name implies, we do indeed review the volatility, trading, action, and trends and developments such as they are in the world of volatility this week. And as we're coming at you live here right around noon Central on this Friday, May 5th, hard to believe we're cranking away through May already as well. This year, 2017, just flying by in just a sea of low volatility here. And VIX Cash, as we're kicking the show off here, almost literally unched from where it was this time a week ago, right around 10.5. So net to net, close to close, at least show to show here for the week. Not a lot going on in between there. VIX, or I should say VVIX, almost exactly where it was last week as well, right in the high 70s, right around 78 as well. So yeah, things are actually a little over 79 now as we're talking, but still almost literally exactly where it was last week. So we're in a very similar scenario, at least from a net numbers perspective, as to where we were last week. Of course, we did have some numbers popping off this morning. We'll get to those in a little bit as well. And as we're recording this and streaming this live, most of the major indices also kind of having a ho-hum day as well. Pretty much the S&P, the Dow, and the NASDAQ all, if not literally unched, very close to it. So in terms of net movement, net rocking and rolling on the day, there has not been a lot, at least so far. It doesn't mean the week itself has been completely action-free. There have been some interesting developments. Let's go in opposite order. Let's start in the corner office. Mr. Rhodes, obviously, it has been a low VIX week, but things have been happening. What's been catching your eye this week from a volatility perspective, sir?
Well, like you said, VIX, we didn't say it specifically, but VIX got as low as it's gotten since I was still working at a hedge fund. Since 2008 with a intraday low of 990 this past week. What's really interesting is it's low, but gosh, how flat the freaking curve is going out to May and June as well. We've had VIX hovering around relatively low levels, but everybody's continued to comment on how steep the curve has been relative to the low level of VIX. And it seems like they've even thrown in, whoever they are, have even thrown in the towel on that one. So you have to go looking under rocks and stuff to try and find volatility these days. It's just gone away.
It has been fascinating to watch. I think both Meatball and I last week were feeling a little bit more, not a ton more, but a little bit more. You were actually, all three of us, which was weird, were feeling, I think Mark was a little bit more. I was about a handle or so more. You were about a handle and a half or so more. All of us were feeling that it just seemed seemed a little bit too slight, given all the other known and unknown unknowns lurking out there. We thought at least one other shoe would drop. Maybe it would be earnings this week. There were a lot of big names popping off this week. Maybe it'd be something in the macro realm. Maybe another tweet from Mr. Trump. Either way, none of that combined to really budge the needle from a volatility perspective. And here we are, literally unched. A spoiler for the crystal ball later this week. Once again, it shall be interesting to determine who the winner is. But before we get to that, Mr. Meatball, what was catching your eye this week, sir?
I have to say it was. It's definitely been a week where we saw volatility actually get a little bit of a bid and then die again. It just can't. It is unable to stay bid in any way, shape, or form. And I'm surprised, but you would think ahead of the election tomorrow. So we're finally seeing a little bit of a bid from things out of what the Le Pen type of dealie, but even that is barely a notch in volatility. So I've just been continuously surprised by what I'm seeing.
Yeah, it has been, like we said, a bit of a quiet week, a good week, I think, Mr. Rhodes, for you guys over there in CBOE land to perhaps stir the volatility pots. One of the things we get asked a lot on this show, particularly whenever there's any sort of looming volatility crisis in Europe, as there was recently with the votes, or of course with the Ukraine crisis or Brexit, pick your poison over the years. There have been a number of opportunities where people have asked us, hey, we want a little bit more volatility exposure to Europe. What can we do with that? Well, you guys over there at the CBOE announcing this week, VSTOXX, the EVIX is the ticker. These are the options on the VelocityShares long VSTOXX futures ETN. So we're already seeing, Mr. Rhodes, the fruits of that BATS acquisition coming home to roost. But what are your thoughts on these? And are you excited, as I know a lot of people are, to have something else over there that could actually grant them some access to vol exposure out there across the pond, as they say?
I'm very excited about this. And you know what I'm really, really, really excited about with respect to EVIX and EXIV, which is the opposite of EVIX. I've got data going back to late 2009 that can tell you what both of these funds would have done. And boy, am I going to have a good time with that data and comparing it to VXX and XIV and seeing what people might have been able to do, how they move relative to each other and all sorts of things this weekend. So EVIX is basically VXX based on the VSTOXX. EXIV is basically XIV or SVXY based on VSTOXX futures. And when you create a fund like that, you also create an underlying index. And I scurried down to the Bloomberg this morning and found that they've got index data for both the long and short European versions of the ETFs or ETPs, as I mentioned, going back to late 2009. So I'm about to have a field day.
I'm excited for these. I think that they're going to be a totally new product. They are going to be really robust. I would be shocked if these are anything other than a success, just because of all the interest from Europeans in these products. And I think that you'll see a lot of EVIX, EXIV versus VXX, XIV type trades go up, and they could be really cool to kind of pay attention to. I'm pretty excited.
Because VSTOXX has always been kind of the choice for that realm, but, liquidity, other things have been an issue. Maybe this will drive, like you said, some back and forth trade there, maybe increase some liquidity and make it a more viable prospect in general for people who want that exposure. Because we know they're out there, and then they rear their heads whenever these types of isolated crises emerge, like the French election or Brexit, or, again, pick your poison over there over the past couple of years. We get those emails come in like clockwork. I like VIX, but I want something a little bit more focused on Europe. What can I do? And the answer has always been the same. It's nice to have a few other arrows in our quiver for that. So, yeah, we'll be paying attention to this one. If you guys are out there you're excited about this, if you have thoughts about this, hit us up. I'd like to hear what you guys have to think. Other CBOE index land. People were starting to hand wring a little bit about the Skew Index over the last week or so. It was up into the low 140s, and then all of a sudden, still not quite as rich as it was, but still in the somewhat rich side these days, coming off a little bit again. It's about 12 points actually lower than it was last week, right around 130 or so. So a lot of the hand wringing we're seeing out there in good old Skew Index land seems to have abated, at least for the time being. Now, we talked many times before about what the Skew Index actually means, how there's a lot of context to it. The number by itself doesn't tell you the whole story. So we're not going to dive into the full picture, who's buying puts, who's selling calls, that sort of thing. But it is worthy of note that all of you who were writing in some concern about Skew Index equaling the apocalypse, we even had that great zombie apocalypse poll as a result of that about a month ago or so. Times have changed a little bit. Things are a little bit quieter, so you can put away perhaps the samurai sword or the chainsaw, whatever it is you chose on that very popular poll that we did on that. Let's get into the VIX realm on the options side. We already talked about the futures. The futures are fairly flat. There's not a heck of a lot really to be mined out there in the term structure. In fact, we should have your boys, one of the Thompson twins, on one of these days, Mark, just to see what they're doing on this uber flat term structure. Are they kicking cans? I don't think they're mulleting right now. So it'd be interesting to see what crazily named strategy they've adopted for this effectively flat environment that we're in. But one of the big stories, since we're getting into the VIX options, one of the big stories that's been lurking on, I've seen this everywhere. I think the Journal has run with that. I know Financial Times has, even other outlets, Business Insider, certainly Zero Hedge, all these places have been running with this, the mystery VIX trader. Who is this mystery VIX trader? They've dubbed him 50 cents or 50 cent, as the kids like to say, because he kept loading up on all these super cheap VIX options on the upside. This has been an ongoing point of contention, cause for debate, call it what you will, over the past, it's been for a while now. In fact, according to this data coming out, I believe this is from the aforementioned Business Insider, who talked to macro risk advisors. They said so far he spent about almost 120 million, 119 million on these severe upside bets in the VIX, aka big VIX spikes, aka usually coinciding with a big sell-off in the broad market. So far of that, about 89 million has expired worthless, which I'm sure you guys probably could have guessed if you've done the math. You've seen exactly what VIX futures have been doing over the past few months, what the VIX cash has been doing, so it doesn't take a genius to realize buying extreme upside in the VIX over the past month or few hasn't exactly been working out. But Mark, you were talking earlier before the show how it seems like our friends over there at the FT have been sniffing. Everyone's been sniffing after this guy. I myself just assumed he was French because we know there's a long-standing tradition of a lot of French players in, of course, SPX, and as a result, VIX. I just assumed this VIX whale was French for whatever reason. Maybe it's my legacy SPX bias. I don't know what it is. But I assumed he was French, but you're, at least what you've been talking about, Mark, our FT friend, saying, nay, he actually may be British. Are you buying this, Mark?
It could be. It could be British, French. But what I like is that it confirms exactly what we thought, that this is not just a big bet on volatility going up. It's a part of a large portfolio because that these are being used to hedge. They're not being used to, try and actually predict vol pops. And that is why he doesn't mind losing this much, because the balance of his portfolio is probably doing pretty well. And so, could it be this British guy? Why not? Could it be a French guy? Why not? My guess is that whoever it is, they have a big book of exotic options, exotic spreads, and structured products that has been doing pretty well as of late. Otherwise, there would not be this much active hedging.
Yeah, according to these reports out of FT, this is a $20 billion fund coming out of London. It's Rougher Investments, I believe. They have money for the Church of England, amongst other many large investors there. So a well-established fund, $20 billion. So yeah, you're right. For them, 100 or so million on a hedge is nothing, and it certainly would be something that they would easily spend. And it gives you some thought as to what the size of that short position is if they are indeed out there. And this kind of maybe goes back to what we were saying before with that feedback loop. And just about every large fund these days, even if they don't even play in the vol space, has awakened over the past 6 months to, hey, maybe buying vol hasn't been the best play. Maybe selling some vol strategically here or there may be a better play. So it wouldn't surprise me at all if a large fund like this has awakened to that notion as well. Mr. Corner Office, I know people have been asking you about this mystery VIX guy for a while. Are you buying what they're selling here, that it is this guy? And are you on the same boat? I got a feeling you are, that these are really just hedges and he's not just swinging for the fences with these VIX calls.
I know things and I've been sworn to secrecy, but I will say that you guys are not far off, and hedging is definitely part of the story.
There you have it, folks.
I know things, and I've been sworn to secrecy. I love it. See, that's why we like poking you every now and then, Mr. Rhodes, because we know you have inside info from your corner office. All pipes lead to the corner office at the end of the day. But yeah, I'm with you, Mark. We've been saying this for some time. People have been going on and on about how much money this guy is spending and how super crazy it is. But yeah, at the end of the day, 9 times out of 10 when we see these positions, particularly in a product like VIX, which is so heavily institutional, they have something else going on, because it'd be an odd model that would say, hey, this is the scenario you want to do. They could be saying, you know what, all of our macro models are pointing to the end times, and we find these cheapy VIX calls the best way to do that. But it's not likely. Let's just put it that way. But then again, you guys can speculate yourselves. What do you think is cooking over there in the realm of all things VIX? Are you buying who this mystery trader is? You think he's hedging? Tell us what you guys think. We have a lot of people already hitting us up with a lot of comments. Ryan Stadden saying he thinks anything under 10 in the VIX is very concerning. I don't know about concerning. It is interesting. It certainly is exactly the opposite of what just about everyone, myself included, assumed when we had this new administration coming into town back in January. I think everyone, all the smart money, quote unquote, just if you had one bet to make, is that Trump equaled volatility. And the joke was Trump ain't a single-digit VIX president, and that is literally almost exactly what he is right now, or at least he has been for 2 brief periods in his short tenure so far. So yeah, very interesting stuff. I don't know if I'm concerned as much as just interested that's what's cooking. Speaking of things that interest me, I'm always interested in weekly VIX options, so let's get to it. It's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, everybody, you know what that ridiculous drop means. It's time for Mr. Rhodes to regale us with 38 to 45 minutes worth of in-depth, intricate analysis of all things weekly VIX options. The time is set aside, sir. The floor is yours. Have at it, Mr. Rhodes.
To fill that much time, I must speak slowly.
It's not been very exciting. That's the way.
Right. I mean, this segment is the most pressure-filled part of my week. I spend hours preparing, and I found one trade that's kind of interesting, and the timing of it had me scratching my head a little bit. But yesterday, I think a couple hundred times, somebody bought the June 7th. Kind of a funny. Maybe they expect something out of the next employment number. I don't know. But the June 7th, 17 calls, they bought them for 49 cents, and they sold the 19 calls for 34 cents, looking for a spike up to, maybe 19, 20 or so in the June 7th futures. They paid 15 cents for that spread. But otherwise, and I lowered my threshold a lot. I looked for anything above 100 lot. But and I do think that this is an indication that any of the known unknowns in the horizon, including this weekend and the June 8th election in Great Britain or England or in London or however you want to put it, or the next Fed meeting, all of these known unknowns don't really have anybody concerned.
Yeah.
And then I guess that and then looking at the other side of it, where, you might be using the weeklies to target a potential volatility event. I think we're in such a low volatility environment, and there's so little room between the index and the near dated futures that nobody really wants to do anything to try and harvest volatility because of the risk associated with that. So it was very difficult to come up with much to talk about, which gives you the continued opportunity to make fun of me about that.
I shall do so as I fill the rest of your allotted 38 minutes. I give you 38 minutes every week, and I'm ever optimistic that you shall find these. I am looking at that trade you talked about right now. You're right. It is pretty much the only open interest out there in that June 7 contract in the weeklies. Looks like 100 lot of that vertical, the 17-19 vertical. So maybe you're right. Maybe he's taking a little bit of a flyer on some upside. Maybe he's hedging. He liked a nice little near-term hedge. Either way, you're right. A little bit of upside action in the VIX weekly options is worthy of note, particularly this week. And we've been joking about how quiet this week was, but actually it hasn't been. It's not like it was back in December of last year. I think we had a day out there with like 63,000 contracts on the VIX. Nothing like that going on. It was actually decent numbers. Monday, about 572,000. Tuesday, the action-packed day of the week, about nearly 750. Again, that's volume that most products would probably kill for. Wednesday, 469. Thursday, 657. And today so far, we're at about halfway through the session or so. We're on track for about 375,000 so far. So still going to be under that ADV, which is pretty much unched a little bit higher than it was last week. It was 734 last week, about 738. So they did manage to boost the ADV, even if it has been fairly quiet over the last week or so out here. And overall, that VIX call to put out there in the open interest, edging just ever so slightly north of that average level we talked about last week. Remember, I guess it was going to be about 2.65. If you follow Russell or us after the show, we tweeted out the actual number was about 2.77. So we were actually pretty close with our guesstimate there. And slightly north of that right now, hovering right about exactly 3-1 out there in the open interest for all of you out there who like to watch such things. And if you're saying to yourself, Mark, what were the hot VIX strikes this week? Where was the action this week? Well, we got you covered with our top 10 hot VIX strikes. Number one with the bullet, surprise, surprise, our old friend, no doubt perhaps in part, or a large part perhaps, due to our 50 Cent friend out there. These upside strikes getting new life. The 30 line is back with a vengeance. Maybe we should ask our friend at that fund why he finds that 30 strike so attractive. Maybe he's got some actuarial reasons why that specifically was the hedge that he really wanted out there. Maybe he has the answers that have eluded us for so long in our quest to solve the mystery of the popularity of the 30s. Once again, number one with a bullet, the May 30s, 561,000 of those bad boys open this week. Far and away the biggest strike yet again. Number two, the even more optimistic May 35s with about 510, so over 1 million open just in those two strikes. So you're talking size paper out there. Number three, the slightly more reasonable May 20s. In comparison, they seem comparatively very level-headed. The May 20s with about 435,000. Then we drop off quite a bit again to number four. The May 21s, 335,000 contracts open there. Number five, the May 16s, bit of a nice May call strip going here. About 320,000 contracts open there. Then we drop below 300. Down to 285 for the number 6 spot, the May 22s. Got to go all the way down to number 7, listeners, to find the first and only put on our list, the May 13 puts with about 238,000. Now we're shy of 250,000 contracts open here. Number 8, 232,000 of the May 15s. Number 9, about 230,000 of the May 17s. And rounding out our top 10 here, the nice Goldilocks in the middle strike. We kept saying 25 was the new 30. These days, it's fallen off a little bit. The May 25s with 222,000 contracts open. Again, this is probably the first time in a while we've seen all of 1 month on the top 10. It's all May all the time. No other months or even any weeklies in there getting any love whatsoever. A total of about 9.7 million looks like open on the mothership options, about 7.2 on the calls, and about 2.5 or so on the puts. Before we roll off the big mothership VIX options, Mr. Meatball, I know you've been watching things. You've been slinging any more flies in the weeklies, or aside from our friend out there, Mr. 50 Cent, any other options activity really catching your eye out there in the VIX mothership this week, sir?
You know, there was a bunch of risk reversals that went up again. There has been a buyer, kind of a combination of buyers and sellers of kind of different levels of May. Have not really seen a lot of really crazy activity, though. It's been kind of excessively slow. I'll be honest, there's just not a lot going on. Seen a little more today. We did see in the weeklies, I saw a guy quoting up the May 10 15s that expire next Wednesday as what I think is kind of a play on the election this week, but that's been about it. Nothing really that great, unfortunately.
Well, there have been some great things popping off there in good old. I'm just looking at some of the other comments people are sending in about our mystery. People are fascinated with the mystery VIX options buyer. I should draw my attention back from that, back to the show itself. There were some things popping off here this week from an earnings perspective. I know, Mr. Rhodes, you like to follow all things earnings. 'Tis the season, and there were some big names popping off against this week, including a name you may have heard of once or twice. Tesla, I think it's referred to. I'm not sure exactly on the pronunciation on that. I'll have to check. I believe they make something in the electrified motor vehicle field. Yes, good old Tesla. They were coming off earlier this week. I believe it was Wednesday. They closed going into their announcement right around $311. They were pricing in about $17 or a little over 5%. And we did see that was one of the few names that did deliver a movement the next day. It opened off, or ended up closing that day around 5% the next day. So after having a nice run, but it did drop off. Instead of pricing about $20, it dropped as low as about pricing about $17, dropped as low as about $20 intraday and the next session. So if you were long premium, you had your time to scalp out of it, and you had a nice aggressive range. These days, it's kind of closing the distance again. It's right back around 306.5 today. So getting a nice little bid up nearly 4% today. So apparently, all that concern about the reduction in Tesla deposits is going away. The stock getting a nice little lift. I'm not sure what they tweeted out today to boost the stock. I'm sure it was something because the stock off to the races again. So if you were a premium seller, if you were patient, you may, it depends if you're trading the weeklies or not, you had an opportunity to at least, shall we say, stem some of your losses. You're still not looking great, but you may have had better opportunity, better than it looked a couple of days ago. Let's say on the other side of the coin, where people weren't concerned about dropping deposits, they were just blown away at how much money they were printing. Was Facebook. They keep squeezing ads into your news feed there. They're like, you want some news? How about 5 ads? And lo and behold, all those ads grew revenue 50% during this quarter, just blowing the doors off any estimates, again, showing just the utility, or perhaps lack thereof, of those analyst estimates out there. But of course, they did caution a little bit, saying, we can't keep squeezing ads in forever. There's a limit. It's kind of like the old days of display on the web. You have a web page, you put a banner at the top, then you start putting 2, and then you have 4. Next thing you know, you got ads everywhere. There's a limit to that. And same thing with the news feed on Facebook. There's only so many ways you can go. They're hoping to start leaning on some new venues like Instagram, start getting some video ads to help drum up that action. They closed going into their earnings right close to 152, about 151.80. They were pricing in about a $5.60 straddle. So right around almost 4, about 3.7%. This is another one that is not quite unched to close out the week, but it's pretty close. It's trading today right around 150.20, is about so off about $1.60 or so from where it was, but still from a premium buyer perspective, it has not been perhaps the rock'em sock'em robots that people were hoping for out there in the past. 2 interesting announcements, because people had on both sides of the aisle, the bulls and the bears had something to kind of sink their teeth into, which, look at Tesla, it's already rallying again. So we'll see how this works out. Mr. Rhodes, we'll start with you. I know you like watching all things earnings and all things volatility. We talked last week about, what is the earnings narrative? We like to kind of ascribe a narrative to every quarter. Last quarter, it was definitely underperform. This quarter, it seemed like it was a bit of it was up in the air. We had Netflix kind of coming out of the gate, and that one usually blows the doors off upside or downside. This time, it was literally unched at one point in the after hours, which is something that we've almost rarely ever seen. So premium sellers had a big smile on their face on that one. We had a few others, though, that did outperform. So it's kind of been a bit of a mixed bag. Now we got, Facebook and Tesla almost back to unched here at the end of the week. So first off, what was your take on these announcements? And then what's your take so far on, earnings season in general? You think we have is this a mixed bag? You think there's a more of a narrative developing here? What's your take?
My theme for this earnings season, and I'm still trying to come up with something that's clever enough for a T-shirt, is that we're just about to make America great again, but it's not showing up quite yet. I think there was a lot of enthusiasm going into the quarter, and also because you've seen some pretty decent economic numbers, but it didn't seem to be showing up in corporate earnings as greatly as a lot of people were hoping. I think that's why we didn't see anybody that maybe put up good numbers. I have a blowout to the upside as far as their stock price goes.
Mr. Sebastian, same question for you, sir. Any thoughts here? I know you guys, particularly in your pitch chat over there, a lot of your active folks like to trade in and out. I'm sure Tesla's a big one on their radar, probably Facebook too. What are their thoughts and your thoughts on what you're seeing this week? And do you feel that there is a concrete narrative shaping up for this quarter, or is it kind of a mixed bag?
You know what? I do think that there's a little bit of a narrative. My thought, here's kind of what I've seen is that, especially in the popular names, kind of the first day has not really mattered. Mm-hmm. What's really happened is the day or two after, we've seen a move higher. So take a look at Apple. They didn't love the earnings. And now if you look, the stock's higher than it was pre-earnings. So there is definitely a narrative of they are going to chase quality. They're going to keep buying it. So we saw your Netflix that had bad earnings then pop. We saw Apple get beat, and then now it's doing a lot better. And kind of similar stuff on some of the other popular names. And that's really been what I think has kind of been, I think the story of earnings season has been that.
So kind of a second chance, if you will, second look. People getting a little crazy in the initial blush, and then maybe a day or two later saying, maybe it's not so bad. I could certainly see that. We used to see that a lot out especially when I was trading options in the after hours and, in the earnings around Intel. That was the most infamous back in the GoGo.com period. And we'd always used to joke about what the first blush reaction would be, which would often be just completely erroneous. And that was often a great time to work some, shall we say, extreme gamma scalps, because you get filled at prices you never could any other time. And then, of course, things would settle down. Usually it would happen faster. It'd be within a few minutes or hours. Sometimes this season, this quarter, it seems like things are taking days. But c'est la vie. Interesting stuff. Nonetheless, we haven't heard the last of earnings vol, not by a long shot. But now it's time for you guys to weigh in and join us here on the show. It's time to check our volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, got a deep voicemail this week. A lot more coming in from the live commenting. We'll see if we can get to some of those too. We asked you a lot of questions as well this week about what you thought about earnings. I'll give you a couple. Going into the beginning of this week, of course, we had Apple, and we asked you guys right at the time, Apple's right around 146.5 right now. It's trading actually about two handles higher than that, about 148.5. So it's been a good week for Apple, even after all that noise. And their straddle is about $5. We gave you some out-of-the-money calls and puts that were both about 27 cents. We said, what would you rather do, buy that straddle or the iron fly, because we gave you the wings too. Sell the straddle, buy the call, or buy the put. Overwhelmingly, nearly half of you came out as wanted to buy the call. that seemed like the wrong bet in the retrospect. It just looked pretty much all those for the most part. Even buying the put didn't work out because the strike was just too far away. It never really got through that. So pretty much all those, well, I guess depending how you mitigated some of the selling, maybe it could have worked out. But all of those were kind of looking pretty dubious, particularly in the first blush. But again, like we said, Apple, like Mark was just saying, the narrative has shifted Apple back in rally ho mode. So I guess if you held on to those calls, what strike were they? Were 155, so they were a little optimistic. We're not quite there, but still, buying calls was where the love was for all of our listeners there. We also joked with you guys about, hey, we were joking yesterday with your cohort there, the Rock Lobster, who had great love for Zynga back in the day. And so Zynga was reporting earnings last night after the bell. That, of course, stock shy of $3. So we asked you guys, do you ever trade options on cheap stocks? You said yes down to 10, yes down to 5, rarely or no, that stock itself is an option, and that one so far has blown the doors off as well. About 47% saying that. That's kind of where I lean between that or rarely. Maybe I could think of a handful, maybe on one hand, the number of times I've actually traded super cheap options on a super cheap stock like that. So not a lot of love for that, which is kind of what I expected there. I don't know, really quickly, Mark, I think I've talked to you about this. Russell, I've never asked you before. What is your, some people seem to have almost like a religious schism on this. They won't or they will when it comes to like options on cheap stocks, sub $10, sub $5. Some people will just, I won't touch them. The stock is an option at that point. Others say they have their use case. I like them. I like doing that. Where do you fall on that?
I think there's a use if you think something's overdone and there's going to be an event on the horizon. However, if you're just, and I'm going to go with the bullish side because you're talking about such cheap stocks, and it doesn't make a whole ton of sense to play something that's at 3 to go to 0 because you only got three points of potential upside there. But if you're somewhat bullish on a company or a stock that's reached that $5 price point, the leverage you get using options, you may as well, like you said, think about the stock as an option by itself. And, in the stock that comes to mind is Citigroup back in the day before they reverse split it. The stock was hovering in the $4 and $5 range. And it was practically an option on whether or not they were going to survive back in the 2008-2009 timeframe. The other thing, and I'm not sure everybody realizes this, but there are lots of relatively large mutual funds that are not allowed to own stocks that are priced under $5. So that price almost acts like a magnet sometimes, where whoever they are that want to push the stock price down might be pushing it down to 5 or so. And it may take a while for some of the bigger funds to work out of something that they're being forced to work out of. And just that type of an overhang doesn't really lend itself to buy a call option or put on a bullish option spread using when it may take some real time for a stock to recover or a company to recover.
Yeah, that's
buying the stock than doing something with the options.
That's something we don't really talk about. That demarcation at the $5 line. You're right. That does have some bearing on the volume when you get down to those levels. Start flirting with the old pink sheiks. To round out the week, we asked you guys a nice little weekend flash poll. So these are crazy times, and they certainly are. From commodities to equities to volatilities, crazy times in all these markets. So we gave you a bunch of quote unquote crazy levels, and we asked you which one do you think will hit first? You think VIX will drop below 9 first? Will the SPX get above 2,500 first? Will WTI, so crude oil, get below $40 first? Or just to appease all you equity heads out there, Apple get above 160 first? Let me just say there's a clear trend to the voting, the early voting right now. Let's start with you, Mr. Meatball. I have a feeling I know where you're going to go on this one, but what are you feeling we're going to hit first?
What were my options? Single digits?
VIX below, not just single digits, VIX below 9, SPX above 2,500, WTI below 40, or Apple above 160.
Oh, Apple above 160. For sure. It's going straight up. It's an unstoppable force. I mean, it's such a hedge fund hotel. And really, with how much, with the dividend, potential corporate tax reform, I mean, I have a lot of trouble imagining a scenario where, it doesn't get bought by a lot of a lot of people.
I thought you meant Apple, the company, get bought. I was like, wow, who the hell has the cash to do that?
No, not Apple, the company.
That would be an impressive acquisition, quite a bit. They have to take a state entity to come in and do that. Mr. Not Meatball, Mr. Corner Office, which of those four, shall we say, some rarer than other type events do you think will hit first?
I was leaning toward lower oil prices, and substitutes are coming online. Plus, I think we've got the possibility of some geopolitical things that actually push, or I shouldn't say geopolitical, macroeconomic outside the U.S. that might actually result in a slowing global economy, and that usually has a pretty negative impact on oil. So that's the one I think actually might pop up.
I'm feeling you there, of course, if you like the oil stuff. We'll be getting to that in about 45 minutes, listeners, with our TWIFO program this week in Futures Options. I have a feeling, just an inkling, that crude may be on that discussion topics for that show as well. But I'm kind of feeling you there on the WTI below 40. I don't know. I'm kind of torn between those. Obviously, VIX below 9. That's going to take and that and SPX above 2,500. Obviously, inexorably linked. Those two. They were put there for a reason. I'm kind of back and forth. I may end up hanging with the WTI. With the rebound this week. Otherwise, if we didn't have that rebound, I would definitely be there. I'm going to go that way just for fun. Just also because it's kind of a tie right now. 45% saying Apple, so 45% going with the meatball. I could certainly see that one too. This thing's been on rally ho mode. If it keeps on the track it has this last couple of sessions, we could hit 160 by next week. So that could easily happen. And then 23% a tie actually for VIX below 9 and WTI below 40, and 9% saying SPX above 25. I thought that would get a little bit more love, but no love for that one. Speaking of the love, our listeners do love us. They send us all sorts of great stuff, including some quality art sent in by Hawkeye here, clearly inspired by our friend Don Schlesinger, used to be on the program, and also inspired by yesterday, May the 4th, the big Star Wars holiday. He sent in a great piece of fan art. We tweeted it out. We'll tweet it out again. We'll put it in the show notes here, too. It's, shall we say, a volatility-inspired Star Wars piece. It's got Yoda in a cool silhouette, and it says, buy not, sell, or sell not. There is no buy. So clearly, Mark, inspired by our old buddy, Mr. Schlesinger. Would you agree?
Yes, for sure.
This Hawkeye has written in before. I believe he's even taken some of your classes, Mark, so I think you may know who this guy is as well. Yeah, he obviously clearly skilled in the Photoshop realm as well. Let's see. Speaking of, since we're talking about Don, he has sent in some things. He did respond. He sent in a bunch, actually. Let's see if we can get a couple of them. Don Schlesinger, of course, our old co-host here on the old program, well-known in the world. Shall we say, not a fan of buying volatility. In fact, he always used to be infamous for saying volatility is to be sold or not sold, and options are to be sold or not sold. And so he wrote back in, because we talked about him, actually, if you remember, Russell, back when we did that risk management conference roundup about a month ago. I mentioned his name. I said, oh, well, I invoked Don. And he responded, said, yes, you did invoke me. I was listening to the recent vol views from risk management when I heard my name. And he wanted to share a few views here. This is a long one. I won't get through all of it. But he was kind of interested. We talked a lot on that rundown show, Russell, if you recall, about the continued fascination with the quote-unquote harvesting of the risk premium and how that's still a theme, all these years later. Don kind of concurred with that. He said, I am continually amused by the staying power of traditional topics. 33 years ago when I began the industry, but most especially after the 1987 crash, when Skew was born, it became axiomatic to me that the only good thing to do with an option was to sell it or not to sell it. Again, getting back to his infamous phrase. Today, you've invented the newfangled terminology such as risk premium harvesting, which I find adorable, to describe exactly the same thing. To sell options because their implied volatilities are on average considerably higher than what realized volatility of the underlying goes on to display. I'm not sure why we need the new vocabulary, but whatever makes people happy. You can either be the insurance company or be the policy owner. Which one makes the most money? So there you go, our friend. I don't know, Russell, did you ever interact with Don when he was on the show?
No, I've never actually met him. But
he's a smart guy.
Yeah, no, you've got to constantly come up with new ways to put lipstick on the same old pig, even if the pig's pretty. And I like volatility risk premium harvesting. That comes from a couple of the guys over in our business development department. They basically like to say that instead of selling options for income, which I personally want to keep things simple and say selling options for income.
I gotta give some credit to your harvesting the risk premium, folks. It does have a certain cachet to it that just selling vol, selling options doesn't really have. Anything harvesting sounds good. Here's one that came in from I don't know what this handle is a mouthful. FKS THLM. You need a better handle. I can't read that. He says, any thoughts on what he terms the collapse in SPX volumes? And he also included a chart of SPX volume, which is kind of interesting. This one kind of took me by surprise, the way he termed it. I have to go dig in a little bit and look myself to see. But it's funny. We've been talking about options volumes on this show. Obviously, we do all the monthly volumes every week and every month, I should say. The numbers come out of OCC and others. And it has been a general downward trend so far this year. I think ADV is down a little bit. One of the nice bright spots, though, every month upon month, this last month was a massive bright spot, has been index options. They've always been up month over month. So I haven't really dug into SPX volumes. I assume when I see those numbers up, I assume that's SPX as well. In fact, SPX today doing 600,000 contracts. So it seems to be fairly robust. Of course, ADV out there is about 1.1 million. Again, SPX kind of in another category when it comes to volume out there. So I don't know what he's talking about in terms of collapse. Maybe there's been a little bit of a recent downturn. Some of that spike in volume could be coming in ways of, again, they don't delineate when they say overall index volume, so it could be other indexes, could be SPY, could be a lot of other products kind of accreting into that hole. But I don't know, in general, Russell, have you been looking, has there been a little bit of a downtrend in SPX of late, or is this guy, is he smoking something along with his crazy handle?
The last couple of weeks were slower, but I wouldn't say it's been anything serious because then, we saw things pick up again. So there was a period of about 2 or 3 weeks where things seemed a little slow. That seemed to have passed.
Mr. Rhodes, do you concur? I think collapse is a bit strong.
I'm not sure what he's talking about, which is what I was saying as I was muted before. And I did it. I'm taking the blame for muting myself by accident. But, we did 1 million contracts on average a day just in the SPX complex in 2016. And as I speak very slowly, I'm coming up with the average daily volume for this year. I know that we've had a few days that have been fairly slow, but we've had a lot of days over 1 million.
So far, it's 1.1. That's not for the year, though.
Guess what, Mr. Collapse? We're actually up year over year on average daily volume for SPX volume.
Wow.
So I don't know, man. I'll give you a percentage in a second, but our average daily volume in 2017 is over 1.1 million, and it was 1.16 million. It's right in line actually with last year, and last year was a record year. So there's been anything but a collapse.
Yeah, I was going to say, I think a collapse, I would have heard of it by now if there was a collapse in SPX volumes.
I mean, I would be worrying about my job, and I'm always worried about my job, and I wasn't worried about my job.
That's a random Tuesday for you, but yeah, I think we can safely say the rumors of the collapse are greatly exaggerated. Speaking of things that were exaggerated, our vol guesses were exaggerated. It's time, once again, for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. This is indeed the portion of the program where we attempt to wrestle that slippery pig known as the VIX Cash. And it is a very slippery one of late. He refuses to grow bigger, despite what we say. We keep saying, eat, get bigger, get a little healthier and fatter, and he just refuses. He stays lean and mean. As we said last week, this is, of course, where we try to predict where the VIX Cash will be right now at the end of the show here, right about 1 o'clock Central on Friday, and so far VIX has barely budged today. It's up about a tenth of a point, just about 10.65 or so right now out there. So pretty much unched from where we started the show for all intents and purposes. And so far, also from where we predicted, it's not that great. We were all, I was feeling a little bit more love. Mr. Rhodes, as always, feeling a lot more love. And Mr. Meatball was actually kind of the Goldilocks. He went quite a swing for you, Mark, in the span of a week, going from 16 to 11. But it worked out for you. You're the closest. You're about 0.36 away, so you get the catbird seat this week. You weren't talking again. You weren't hedging your book this week, huh?
No, well, we won't say that, but yes, I had a feeling that that vol was going to come off and that things were going to be pretty slow for the S&P 500 or for volatility, especially once it turned out that it was just going to be Le Pen and Macron or Macron. Once it turned out to be that, it looked like things are going to be pretty boring. It just doesn't feel like anybody's scared of anything. Why would they be? So that's just kind of been the theme here.
So you're gonna stay with 11 then, or are you gonna go back to 16?
I'm gonna go to 9.95. God.
So in the span of a freaking week, you had a over 6 handle extreme in your views on vol. I like it. All right. Not to say you are anything if predictable and or stayed. 9.95 for the Meatball. Well, I tried to push the pig north last week. I tried to give him a nice handle on the upside, and he steadfastly refuses to budge. I see where you're leaning, Mr. Meatball, but I'm gonna dial back my approach from last week and try to keep it a little bit more in the realm of where we are right now, because we saw what happened this week and none of it seemed to matter in terms of net vol. I wouldn't be surprised if we dip down those range, but I'm going to say we're going to stay right around where we are right now, which is in the, I'm going to say the 10.55 range. I'm going to say right on there a little bit, just pretty much where we started the show this week. All right, Mr. Rhodes, last but certainly not least, the diehard vol buyer of the bunch, unless Meatball's buying 16s again, then you're out of luck. But other than that, what are you feeling this week, sir, or should I say for next week?
Well, I kind of know this strange guy that back in the day when he was a little kid, if anything was out of place, he would run around the house screaming 10-10, 10-10. We still don't know what that means. But in honor of one of my best friends, I'm going with 10-10.
Oh, wow. Sounds like your friend may have had some issues.
Yes, he did.
You might want to discuss with a professional outside of the volatility realm. But all right, 10-10. We got a nice little, fairly tight market again. 9.95 on the downside, 10 double on the upside for me, and Mr. Rhodes actually uncharacteristically coming in the middle there, which is unusual for him. That music, listeners, means we've come to the end of yet another epic sojourn, a journey, a foray, if you will, through the world of volatility. We talked about mystery VIX buyers. We talked about impending doom in the world of the S. We talked about earnings and Tesla and craziness. It's been covered a lot of ground in this scant 1 hour. Thanks for joining us. Thanks everybody who joined us live. We love you guys too. Stay in there. We're going to be bringing you TWIFO. So if you like talking about crude and all the volatility in the commodity space, there has been quite a lot of it. Hint: vol is creeping up in the world of crude. Finally. Stay tuned for that. It's coming your way in about half an hour. We'll see if we can beam something into the room for you guys in the interim so you have something to listen to while you guys wait, while we get set up for the next show. But before we do that, Mr. Meatball, what's cooking in the land of the pit?
We have our next master class coming up on starting May 23rd. It's going to be really great. And it's going to be on income trading, which really we mean premium harvesting. You can go to optionpit.com/events to check it out.
And Mr. Rhodes, you and I are going to be talking in person next week. That sounds like that's the beginning of your great travel palooza. You'll be heading hither and yon, including to the well-known volatility hotspot of Honolulu for some volatility stuff. So what's cooking in your neck of the woods, as well as what's cooking with our friends over there at LiveVol?
You and I are going to OIC. First time I've ever been at OIC officially. I've snuck out there and not paid my way in. And and you and I are going to be broadcasting almost exactly a week from right now.
Yeah, we will. So stay tuned for that. Also, stay tuned if you'd like to hear more about all the new things coming down the pike from our friends over there at LiveVol. They are doing a lot of cool stuff. I have been chatting with those guys. We will be bringing on Kathy Clay from that group at the conference next week. So we'll be getting all the new scoops. We always try to twist Russell's arm for the new scoops, but we'll let it come straight from the horse's mouth next week. Talk about maybe some new updates to the platform, some new data, new products they're analyzing. All sorts of good stuff. Stay tuned for that. And those of you in the chat, stay tuned for TWIFO. We'll maybe get you a little bit of options news rundown to help ease the transition in the meantime. And we'll see the rest of you next week for more Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the LiveVol X, next generation execution platform, and LiveVol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.